The crypto clock is ticking and we're on the cusp of a big move which should be coming very, very, very soon. We're seeing compression across all different time frames and it looks like the market is prepping for potentially a big move, right? And you want to be on the right side of that move, which is what we're going to discuss in today's show. Are the bulls running out of time? The bulls had the marginal edge, but is the pendulum beginning to swing in favor of the bears? That's what we need to discuss today. Smash the like button, hit the bell notification and subscribe to the channel if you're not already subscribed. And remember, there's always a poll that you can vote on over there. Would love to get your thoughts. I find this very, very, very interesting, right? Which mostly represents your portfolio, right? Which is the most close representation. Of course, we can't put more than 4 options over here. So you have to choose one that's most closely represented to your portfolio. Is your portfolio mostly Bitcoin, some stable coins, USDT, USDC? Is it mostly stable coins and only a little bit of Bitcoin? Is it half Bitcoin, half altcoins? Or you're just mostly in altcoins, which is currently the vote, which is a little bit scary, right? A little bit scary when most people vote that. And I'm sure you can probably feel it, right, yourself, because the reality is that altcoins have been bleeding and they continue to do so, especially when measured against Bitcoin. We'll talk about that in today's show. So again, vote over there. While you vote, please go and smash the like button there as well. It really helps us to get the show content out. And let's get into it. So banter bubbles over here. If we have a look, of course, on the hourly, a little bit of a bounce, but the dailies are still down, right? We're seeing drawdown across the board on a lot of the different altcoins. Weeklies are down, monthlies are down, and the yearlies, only a couple of coins are up, right? So it has been quite a choppy, difficult market, especially if you are an altcoin native. So we have a lot to look at. The market is compressing. Compression suggests that expansion should be coming next. How do you tell this? Well, you can look at one thing, which is the Bollinger Bands. And then we have a chart on the bottom over here, the Bollinger Band with percentile, which just represents what the Bollinger Bands are doing, but in a different viewpoint. And basically, when you see this line over here hovering around that 10 percentile mark, that shows low volatility, very similar to what they use in the traditional markets, which is the VIX, the volatility index for the S&P 500. When that is down and compressing, then, of course, the market is just ranging most of the time. When it expands, that's usually where you start to see big moves. So we're still waiting for expansion over here. And the longer it remains around this choppy region over here, the more it's going to compress and prepare for a big move. So this is, of course, looking at it on the daily time frame, and you can do this across multiple different time frames. But as the daily squeezes in more and more and more here, you are looking for the directional bias, which you can oftentimes look at the Bollinger Bands as a range, right? So if you look at this as a range, what you're viewing over here is essentially that's the range high, that's the mid range, and that's the range low. Similar to when we draw our horizontals in the chart. Now, the middle Bollinger Band level over here is also really indicative as who has the edge. So for a couple of days, you could see the bulls had the edge, but now it's beginning to shift because we're coming off of very low volatility and you're starting to lose that mid level, which means there is always a risk that this could expand towards the downside, which we spoke about yesterday as well, potential sweeps below $100,000 for Bitcoin. But if that does happen and you very quickly sweep down and reclaim, that could in fact flip things back bullish once again. So I think you need to pay a lot of attention to the market right now, especially if you have a lot of money on the line. If you have the ability to reduce your risk by taking some off, I think that's also a good bet to do, right? So let's get into it. We can also tell volatility over here is very, very low because the liquidations are going down more and more. And every time that we see this, when the 24-hour liquidations start to drop below about 150 million, usually you'll only have a couple of days of that, and then you get your next big move, liquidating a large amount of players, either the longs or the shorts. Now, of course, there is always the possibility of a short squeeze, which you also covered. That's going to be fully dependent on what the stock market does. If the stock market is able to break into new all-time highs, which is really, really close, then that may have a cascade effect, which will take crypto along the ride with it, or should we say Bitcoin along the ride with the S&P 500, since they trade very, very, very similarly, right? So big moves should be coming soon. I think that's the point of this message over here. We have declining volume, which means that bullish moves are unsustainable in that environment. And this is continuing to drop off. This is the daily exchange volume showing a lack of retail interest in the crypto markets. They are not depositing their money onto exchanges. That's essentially what this looks at this data, looks at tokens like Bitcoin, ETH, and Solana, and essentially how much volume is occurring on centralized exchanges like Binance, Coinbase, Bitfinex, with those particular coins, which are the most tradable coins within the market. And basically, if they're not trading these coins and they're not exchanging hands, it tells you that there's a lack of interest, there's apathy in the market, and that apathy could lead to a Wyckoff distribution, which we'll talk about. We brought it up a couple of weeks ago as something as a possibility to keep your eyes out on. I told you I'd re-highlight that Wyckoff distribution schematic to you if it did seem more relevant, and it looked like it could play out, which unfortunately is currently on the cards, right? It's not set in stone, but it's on the table. So in terms of the broader cycle, though, one good thing that we're seeing over here is that we're still in a relatively low risk environment for Bitcoin, in the sense that we haven't reached any of those periods of extreme FOMO, very, very heated market where you're typically looking to sell, and large players would be offloading mass amounts of crypto. So we're still in that limbo phase in the broader scheme of things. And what that basically means is it still gives you a little bit of hope that even if we do go down, it's probably going to be a reaccumulation at lower levels. And then you're going to expand later on in the cycle to possibly take out the highs, where you might print some of the similar risk metrics to what we've seen in the prior cycles, where you get these bright areas of red, right? Red signifies 90 to 100 percentile mark in terms of risk. Every cycle has topped with that. So do keep that in mind. If you look here, here's 2021. We did have two peaks though. Remember, you went red, 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 orange, came all the way back down, reset, and then you weren't able to get back into red, showing a meaningful divergence alongside the RSI, with price making higher highs, but all of the other oscillators putting in lower highs, right? That was the one divergence that we're looking at. So if we look at the current price action over here, look, we got into pairs of orange, but no real red. So is this a divergence taking place similar to 2021, where price is higher, but if you look at the momentum oscillators, well, they're putting in lower highs? That is something that we have to consider, right? So never pretend to know exactly what's coming next in the market, but instead adapt according to the trend, right? That's the thing that you need to be focusing on. So short squeeze, is it possible? Well, the deltas are still negative. Prolonged periods of negative funding over here, negative deltas within the market when coming into key supports does always indicate that there could be a potential for a short-term short squeeze. That's going to be completely dependent on the stock market, which we'll look at in a bit. We got the heat maps over here showing that there's a little bit more liquidity that's building underneath Bitcoin price action on the last 24-hour look-back period. New longs that are opening up over there. There's their stop losses, 103,400, right? It's not huge amounts of liquidity, only just under 10 million up for grabs over there. We can look at the other time frames. Let's quickly see the 48-hour, a little bit more on the upside over there, over the 48-hour look-back period, 3-day look-back period. Almost equal. Let's quickly see what the weekly looks like, and then we'll move on to ETH. So weekly also showing about almost $60 million worth of liquidity at 103,000, which means if we do sweep the range low, which is around that $100,000 mark, you would capture this liquidity. A sweep into the range low, taking the liquidity around that 103K level. So you want to see price drop to about 100K and then recapture the trading range. That would be bullish, right? It's all about how price moves into those zones. ETH, a little bit more liquidity on the 24-hour period on the upside. Let's quickly check 48 hours and then the weekly. A little bit more on the upside as well on the 48 hours, so that's good. And let's quickly shoot forward to the weekly. Weekly is still attempting to develop a bit of a trading range. You got some at 2,400 and again, a bit more at 2.5. So this one's a little bit indecisive. So we'll move on from that. Stock market, right? Stock market opens again today. Yesterday was Juneteenth, which was a public holiday in the US markets, which meant it was closed. What I have done is I very, very simply looked at the 4-hour trading range for the S&P 500, that being the range low, that being the range high, and this being the mid-range. Long story short, as long as price action hovers above that mid-range level, which is above that psychological 6,000 mark, then it does create the opportunity where this trend can continue with those beautiful high lows throughout, and then you can start to challenge the highs. It did reach within less than 1% of breaching that all-time high when you had this wick over here. So currently about just under 2% away. So you need to see continuation. This may play out into next week. I think it's unlikely that you're going to see the stock market. Well, of course, it's Friday, right? So let's be real. Probably sometime next week or within the next 2 weeks that this may trade up into all-time highs, which means, I guess, don't expect fireworks within crypto this week. Expect that this consolidation will probably tighten even more, right? Even more with those Bollinger Bands squeezing in, price getting tighter and tighter before the next either breakout or breakdown within the market. So very boring market. To be straight with you, it is pretty boring. Let's see what else we have in terms of the stock market. I did want to have a look at a couple of things. One was oil, because oil is heating up, right? Oil is putting in some big moves. We're coming into, I think, a weekly resistance level, and let's just quickly double check that over there. Remember, if oil goes up, it makes it really difficult for risk on assets to rally, things like the stock market, things like crypto, because this usually occurs when inflation is coming back and there's some sort of geopolitical turmoil, which is exactly what's happening, right? So there it is. We need a bit more time over here. This is a resistance zone at the end of the day. If we just quickly throw in a bit of a trend line over here, that's a pretty key area for oil to try and break through. So I think this will give us a little bit of a insight once we either reclaim or break down this level. As it currently stands, this is more bearish than bullish because by nature, the trend is down, lower lows and lower highs. And you can see price struggling at that 200-week moving average for oil. So a big level to reclaim. I think if it does start to reclaim this, if you can break above that pink box on oil, let's just remove that midline over there. So if you can break above the pink box, which means oil above $80 and it holds there, then we may be in for a deeper pullback within crypto, and that would be a sign that there's a bit more trouble coming into the market. The other thing I wanted to look at is Coinbase, right? Coinbase putting in a massive move over the last couple of days, and let's go into the daily time frame. So areas of interest, I was asked this question in the Whale Room Zoom session that we did yesterday. Just quick reminder for any of you that are not in Whale Room, right? We have a whole section over here where we do Zooms. There's constant events that are going on with all of our various different traders. So you can learn how to live trade, right? We're taking actual trades in these sessions and giving market analysis and overview, chart requests, etc., everything that you need, plus their respective channels are all listed over here. So for those of you that want to join, the link is in the description below to join Whale Room. Click over there and feel free to sign up. But anyway, going back to what I just covered, the one question that we had yesterday in Whale Room was around Coinbase, right, which put in a pretty sizable move. So one of the targets over here, which it came so close, a little smidge away from tagging, which would have been a phenomenal buy zone, clearly getting slightly front run over there, was the futures gap, right? You had a futures gap over here. Price often tends to revert back into the gap, very similar to the fair value gap theory, which is what I'm about to outline as the next area of interest, but it missed that, right? So it missed that. It may come back there later, but for those that want exposure to the market, oftentimes this may be a better way to gain exposure to altcoins because Coinbase is obviously traded in terms of both Bitcoin and altcoins, which means they're constantly making money. This is like buying the picks and shovels of a gold rush as opposed to trying to find the best place to buy land and mine the gold, right? Which is the equivalent analogy of you trying to find golden nuggets in a massive pile of dirt, which is the altcoin sector. And consequently, you keep getting wrecked, right? So for a little bit of a safer approach, you can always look to things like Coinbase. If we look on the 4-hourly time frame, the area of interest, if this is going to continue this uptrend, would be any pullback that comes in the next couple of days into about 270. You're going to have a long opportunity over there where you can pretty much keep a tight stop loss. Safer stop loss would be down here. Tighter stop loss would be underneath this expansive candle, and that's targeting the fair value gap, right? So you got the prior candle low, this candle's wick low, and then we're looking at the explosive candle that moved towards the upside. And you typically target the equilibrium, which is the mid-level into there, about 270. That's going to be the area of interest for those of you that are looking for some other opportunities over there. All right, let's continue. So we've covered oil, covered the stock markets. This is why I feel your pain. If we go over here, let's quickly view this. 62% of you, still the votes haven't changed much. 62% of you are mostly in altcoins. Which means I should never dunk too hard on altcoins. Know your audience, right? Know the crowd. Keep the crowd happy. But the reality is total 3 against Bitcoin is bleeding hard. It's coming down into this area. Now there's some good news and there's some bad news. The bad news is that we don't know if it's going to bounce off of this trend line, which has acted as a clear pivot level. When it hits the zone and how far has it got left to go, right? So we will cover the bad news first and then we'll go into the good news. About 6% left to go before hitting that trend line. If it breaks through that level, there may be an altcoin capitulation against Bitcoin where you feel even more pain. And that means it could drop as far as, another from current price, another 12 to potentially, if it runs through that level, 30% before getting a meaningful bounce out of there. Now, that means, of course, it doesn't mean you'll lose USD value, but you're going to lose theoretically a lot of value in Bitcoin. But here's the good news, right? The good news is that you can make life-changing wealth when this trend does turn around, like this. And I'll prove it to you, like this over here, right? Life-changing wealth in this environment. It's very, very short-lived. It's very aggressive. It's very rapid, and you won't miss it. And the reason why I say that I can prove it to you is because most of you have been around since, I started and since the beginning of the cycle. And you know that the few times that we played things like meme coins, AI, we had some killer trades over there on the altcoin sector, and we made some massive money. And to give you perspective on the chart of that environment and where that took place, it was literally here within the pink box, there and there. It was in January, February 2024, leading into March, where you put in a major top. We killed it in the meme coin sector, and then we did it again, right, in October, leading into December of 2024. Now, compare those pink highlighted zones relative to what the prior altcoin seasons have looked like, which was this. Imagine how much more we can do, right? Imagine how much more we can do. So I guess the message over here is remain patient, protect your Bitcoin, protect your USD value, and try not to lose too much money in the altcoin sector. When this trend reverses in a meaningful way, like what we saw back in 2017 and 2021, there will be life-changing gains to be made over there, right? So there's a lot going on. Very quick comments over here for Pablo Escobar. What about your Pinex positions? Everything is there. Nothing has changed. I did a whole video on a Saturday about those positions. You'll have to go back to one of those Saturday videos. It was maybe about 3-4 weeks ago. Positions are still being scaled into over there, right? My risk has been calculated on that. That is not a trade whereby I'm trying to make more Bitcoin. That is simply a risk to reward trade opportunity. Remember, there's a difference when it comes to trading, right? You need to decide, are you a long-term investor? Are you trying to make more money over time? What is this thing doing? Let's just try that again. Are you trying to make more money over time, or are you simply just looking for a simple risk to reward trade, right? Are you looking for a risk to reward trade? Are you risking, for example, $1 to try and make $3? That means that you plan on exiting the trade very, very soon. So this is different, right? This, you can trade anything that provides volatility in the market. If there's volatility, there's a trade opportunity. You risk $1 to potentially gain $3. You enter and you exit. The end. You make your money, you take your $3 and you leave, or your 3 times multiple and you leave. But there's a difference between that and playing the cycle where you're going heavy into something like Bitcoin to play all the ebbs and flows, and you're taking one big trade, a swing trade till the end of the cycle, right? So don't confuse the two. All right, don't confuse the two. Let's continue. So we're still waiting for that. That is total against of course, BTC. And we got others against BTC breaking down that major trend. And we actually warned about this already somewhere all the way back down here in like February 2025, about almost 6 months ago, where we said there was a possibility that this could run all the way down and sweep those lows in terms of a horizontal sense. And then you expect at least a reaction. Why? Well, time reinforces levels. It's been a long time since we've revisited this key zone, which means at the very minimum, you should expect a sizable bounce, right? Even if that bounce leads into a lower high, I do want to remind you that, and that is where we made ample money. So that into a lower high, we'll still make a lot of money within that environment. Okay, cool. Let's continue. So hack scams, getting flushed on your account, you got to be careful. Look at the despair in this guy's face. Absolutely terrible. I'll share the story with you because it's a long one over here. But this guy had a lot of crypto. He's been in crypto for a long time. He thought that he was speaking with a team of liquidity providers. And basically, they told him he needs to update his Zoom and everything like that. He went and he changed something in the settings, updated the Zoom. Basically, they gained control of his wallets or his computer, drained all 6 of his wallets from, I don't know how much he had. But since he's been in crypto for a long time, I assume that he went to zero from possibly even hundreds of thousands to millions of dollars. And it's all gone, right? Literally all gone. So what are some of the tips and tricks that you can utilize for this not to happen? Firstly, diversify. Secondly, if you are somebody that's in crypto, maybe you're full-time in crypto and you're oftentimes meeting with people, you send them the link. Also, even better, if you can try and isolate your computers or your devices, so you're never using the same computer for, let's say, crypto business as where your investments or your trades are, right? Keep those completely separated and isolated. And then, of course, you can also use a VPN. So these things are on the increase and on the rise. And the crazy part is, again, going back into the altcoin seasons, these things go up. It's best you learn the lesson now, right? Because look at where we're at now. There's hardly any retail interest even in the market. Do you understand the level of scams that occur within this environment? It is unbelievable, literally unbelievable on a massive scale, massive scale, right? We saw the whole SBF thing that happened, trading users' funds. A lot of crazy things will happen in the market, so you need to protect your capital. That's one of the most important things, right? It doesn't help that you make all the money and then you lose it. You say, provide the article link. Go to this guy's Twitter. There it is. 𝗦𝗫𝗢𝗪, I don't know if I pronounced that correctly, investment partner at Hyperspace, previously in Animoca Brands. Go and have a look at his Twitter if you want that tweet over there. Okay. Also, hacks are on the increase, right? If you look at this over here, a record 16 billion passwords, including from Apple, Facebook, Google, have been leaked in what they say is the largest data breach ever confirmed. So again, separate your devices if you can. You need to take precautions, things like using hardware wallets, and then, of course, a VPN. If you do want to support the channel, we are partnered with NordVPN. They're giving you a massive 74% savings. So you're getting 4 months free. It's like works out to less than the price of a cappuccino per month, right? Per month, never mind per day. So you risk one cappuccino, you can protect yourself with a VPN, protect your IP address. Link in the description below. Okay, cool. Let's continue on over here. So in terms of the trend, we can see that momentum is weaning, right? We've spoken about this. We've spoken about this in terms of the potential divergences. Let's maybe actually have a look at this chart first. We, of course, want to enter into the party zone. The party zone occurs if Bitcoin can break and close a candle above $109,000. Then we enter the party zone and we could see expansion very, very, very quickly. Remember, we're going through contraction and we want that expansion to come into play. But if volume doesn't come back into the market very, very, very soon, well, then you have to consider the possibility of a Wyckoff distribution schematic whereby we slowly just start to come down over here, and following distribution, you'll go through reaccumulation with contracting volatility, hopefully, and then the volatility can expand, and hopefully that's the move towards the upside. Right now, this is doing the job. This is a downtrend over here in terms of the RSI. It's pretty clear as day, lower lows and lower highs, and they're getting more aggressive towards the downside, right? I highlighted this area over here. You would, in the interim, to enter the party zone, have to break the orange line that is dropping over here on the weekly RSI. Breaking that orange line means you're still going to run into trouble when you hit this line over here. That's triple bearish divergence, with price putting in, at that point, 3 drives higher, with the RSI putting in 3 drives lower. There's your bearish divergence. That's an end of cycle potential play, right? You have to call a spade and be real over here. We can reevaluate if it enters the party zone, consolidates in, and this RSI begins to break that 72 region. Great. Then we're looking at higher prices. But right now, we're getting rejected. We're getting rejected over here. It's coming down. It may need to cool off a little bit. It may need to sweep 100,000, see if new demand comes in over there, right? So we're waiting for that. We can have a look at this in terms of the trends. You can see starting already, it's crossing. It's crossing. It's not even starting to cross. 5-day time frame, looking at the 3, the 9, and the 30 MA moving average over there. So the yellow is the 3, the green is the 9. That's your first sign. It's telling you, take some chips off the table. You're losing some key levels and you risk dropping down to the 30, which is at $95,000 right now. So you need to be careful, right? You need to be careful over there. Let's look at ETH. ETH also, it's taking its time, right? As the title suggests, the crypto clock is ticking. Time is running out, right? The bulls need to do something very soon, or the bears are going to take control and you're going to drop down to like 2,270 as your next major support. And that means potential Bart-Simpson pattern on ETH. And we know if ETH goes down, well, that's not going to be very, very good for this chart over here, which is total 3 measured against Bitcoin. Altcoins will bleed against Bitcoin and possibly even drop that pivot level over there. So let's talk a little bit about that distributive pattern, which could potentially be in play. I covered this a couple of weeks ago when price was trading up here. We came down. When it broke back up over here, this is when I highlighted it around the 9th of June. And I said, be careful that doesn't result in a lower high, because if it does, this could be the upthrust after distribution. And this is the test following that upthrust after distribution, which we can often look at the Wyckoff schematic descriptions to see what are the characteristics of what should occur at each of those levels. One of the characteristics is declining volume. If the test occurs on lower volume than what happened at the upthrust after distribution, that could oftentimes be a warning sign that you are possibly about to distribute. So we're looking at a high volume profile. Yellow line is the, let's call it the line to rule them all. Below it bearish, above it bullish. That's 106,145. Very, very clear as day. Potential for a triple top, right? 1, 2, and we call this 3, deviating that key level, breaking back into the trading range following a break of a very, very clear uptrend over here with those high highs and high lows. And then usually that's where you begin to roll over, right? So there will be support and bounce levels along the way. If these things are lost, we've divided this up into a range with the white line as your range high, the line to rule them all, which is your yellow line, just so happens to line up pretty perfectly as a mid-range. So we have the high, the low, and we have the mid-range right over there. Price is below the mid-range. So your best case scenario for the bullish case to play out is still that, which I covered yesterday. Sweep and reclaim. Sweep and reclaim. If you can sweep that below $100,000, reclaim, that will start to look really, really good. Alternatively, you need to break into an area of strength, which would mean start to reclaim back and hold above the yellow. Then this would start to look like a little bit of a shaky high low, but nevertheless, it would be a high low, and we're looking at high prices. So it's all about managing the risk. What I'm basically saying is buying into this exact spot where price is right now is incredibly risky. You're better off waiting for signs of strength, clear some of these levels, and then getting in, or waiting for the sweep down and then the reclaim of that trading range around $100,000 to also get back in. So we know that the summer markets in the US are typically they call it the summer lull, right? It's boring, it's choppy, and if there's no volume in the market, it tends to grind down. Why is it like that? Because the US summers, everyone goes away, right? So they all go on holiday, and consequently, the big funds, they leave the market. They take their profits, they leave, they come back at the end of the summer, and that's where volumes return. So volume is very, very important. Don't underestimate the importance of volume. And if you want to read up about these schematics, here it is. I don't want to go into too much detail over here, but we could essentially be transitioning right now from phase C, which is this zone over here, into the phase D phase. And the transition looks like this, right? What you typically see is after the false breakout, which is the upthrust after distribution over there, price checks the demand at the high price level and often occurs on low volume, suggesting that there's no strong demand. Then you move into phase D, which is where it could potentially be to prove the hypothesis. You see that supply is in full control because price fails to reach the previous highs that were set in phase B and D. So phase, here it is, phase B and phase D. Let's go back to the chart over there, phase B and phase D, right? There's phase B and there is phase D. Price fails to get back to those highs on lower volume, declining volume. That shows you and proves the test, right? That's clear. I hope that helps. Let me know in the comments if that helps. If this is insightful and alpha pack for you, you can always let me know in the comment section, and you can also smash the like button. It helps us to get the show content out there. Now, also, I covered this with Whale Room yesterday. I said that you have to take things into perspective. It's all relative, right? It's relative in terms of where you are within the cycle. We're about 950-ish days into this Bitcoin bull cycle. Bull cycles last between 1,000 and 1,100 days, which means we're very, very, very close cyclically to where the end of the cycle would be. So in a low volume environment, it doesn't always mean that it's bearish. In fact, oftentimes it can mean you find a major bottom. So if you look over here, we can also line that up with the negative funding. There's the negative funding. This is the full cycle. This was the downtrend ending the bear market, which went into a falling wedge. And when we broke back into there off of low volume, then we started the bull run. But the difference is we've already been in the bull run for almost 3 full years. So when you have low volume at the high, you have to use it contextually. And the context would be that I have to give higher weighting to the possibility that, there's a massive bearish divergence with, lower highs on all momentum oscillators and higher highs on price, which means simply the wind is out the sails and, the bulls are running out of steam. And the only way to reset that is to retrace. And when you retrace, then they can reaccumulate and try run it up again, right? So I hope that helps. Look, I don't want to be too bearish because at the end of the day, we know that markets tend to just trend towards the upside, and it's really going to do whatever the stock market does. So I do want to be clear on that. The possibility of the short squeeze is always there when looking specifically at the stock market. If the stock market decides that it wants to mark up aggressively over here and break into new all-time highs, then don't be surprised if crypto follows. But understand the risks that you're dealing with. There are risks, right? There's always risks over here, especially this late in the cycle. So we can look at this as a very, very simple range. There's the simple range, right? Range high, you've lost the range high. What do you do on a 5-minute chart when you lose the range high? You short and you put your stop loss above the recent highs. And until price gets back above the range high, you consider that a failed breakout, and then you look for a retrace, at least down to the mid-range, which in this instance would be $90,000. Now, there will be major support along the way. I think that price will bounce before then. I think that sweeping 100 and reclaiming would be the first bullish plan of action. Secondly, if it doesn't start to lose, because really grinding into that 50 EMA now, and you're getting that compression between the over here the 9 and the 18 EMA. Compression, and it's starting to turn over, which is going to add additional pressure. So think of this like a triangle. This would be the triangle, right? It's like you're reaching the apex of the triangle between those EMAs. This is telling you very, 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 very soon we're going to see a bit of a move, right? We're either going to break down or we're going to reclaim and we're going to start to expand up. It's coming super, super soon. If those EMAs cross over the 50 over there and price starts to hold underneath, you risk falling all the way back down to the 200 EMA and 200 MA. Okay, so just keep that in mind. A couple of different scenarios. I don't want to confuse everyone. Bearish scenarios would be, sweep below $100,000, take out that level, which could easily anyway hit that EMA and then reclaim. Or if it doesn't do a short dip and reclaim, then you may just bounce and then roll through into that 200 MA and EMA. What happened to the bull moon? Yeah, exactly. What happened? Didn't work. You didn't do your dances. That's the problem. Did you howl to the moon? If you didn't howl to the moon, it's your fault. But yeah, the bull moons and bear moons, nothing has 100% hit rate. It won't always work out, right? We have over here a lot of data. Let's just turn these off to clean things up a little bit. So the way that I always take this is, this showed you that there was a massive trend shift, right? You got the bull moon at pump price. You got the bear moon at consolidated price. You got the bull moon at absolutely pump price. You got the bear moon at drop price, right? So that was the first time within the last couple of months that it did a meaningful drop. Then you got the bull moon and it didn't amount to much. So this would be the inverse of this, right? If this doesn't amount to much and all it does is consolidate price at the very best, when a bull moon should pump price, but it doesn't, then it tells you when the next bear moon comes, there's a higher chance that one's going to lead to a more aggressive move. It's kind of like a change in character that's taking place, right? Okay. Cool. Let's see. You didn't charge your crystals. You see, that's the problem. If you are not charging your crystals, if you are not howling to the moon on the bull moon, don't even act surprised, right? Don't act surprised when price doesn't go up. Okay, USDT dominance. Some important things over here. What's important about this? I thought, you can just have a look over here at a couple of time frames starting on the weekly. So obviously we're looking at, we want to see the death cross rejection at the 50 and 200 EMA on, of course, that daily time frame. But weeklies, you can see the stochastic RSI is starting to move towards the upside. So you can work through these different time frames. 5 days still moving up. 3 day is reaching over here. Let's go into the daily. Daily is reaching, so if this can start to turn over here, that's where we want to see that SR flip. So we want to see this reject from here and roll over. This is kind of like the one bullish case, but you need this thing to turn very, 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 very soon, right? That's why we're on the cusp of a big move, as I showed you, wedging into the edge of those triangles, right? We're looking for a decent sized moon. A decent sized move, not moon. Okay. The 8 hour also starting to roll over. So you're looking for follow through very, very, very soon. 4 hour time frame coming down. Maybe that tells you one more test back into the SR flip. That's going to be a big important zone. Okay, it's also respecting, similar to price in USDT terms, is respecting these triangles where it's approaching the apex. Well, you're seeing something similar over here. Look at that. Hourly time frame, it's starting to come down. If this can start to drop aggressively, then you still have hope, right? Hope that you could bounce out of there, and things like ETH BTC could possibly defend this triangle. So yeah, very important zone for the market right now. We'll see what happens over the course of the weekend. We know weekend price action can be all over the place. All right, let me know in the comments anything else that you want to have a look at in the time being. I also want to remind you guys, there's a huge competition at the moment. $5 million, which is up for grabs, which could be one. 10 days left for the event. Link is in the description below. It's for Phoenix over here. So sign up if you're not already in. You're only competing against 4,000 people, which is not that much. So I think that you have pretty good odds. You can just put in the minimal amount and take some big trades over there, right? And you have a chance to win some huge prize money. So use the link in the description below. They're an A-book as well, which is great. It means that they don't trade against you. They one of the clean exchanges, right? Very good exchange. All right. Okay, cool. We can have a look at some of the altcoins if you want. Let's just quickly find. Okay, so ETH is reclaiming. That's good. ETH is starting to reclaim back into the Monday range, similar to USDT rejecting off of, let's put this next because we're on a very low time frame here, but let's run this next to this. USDT rejecting from the downsloping trend line. You want to see follow through towards the downside now. If that's rejecting and ETH is breaking up over here on the 5-minute time frame, let's quickly see on the hourly what that looks like. Starting to break back into the Monday range. That looks good, right? This theoretically is your deviation, and that opens up the trade possibility up to here. So if you're in low time frame trades, of course, these trades make sense, right? You easily put your stop loss underneath there now. You have a pretty tight stop loss, and you're looking at expansion on ETH to the Monday mid-range or the Monday high. All right. Let's quickly go to some of the others. Just on this time frame, we'll see what is BTC doing relative to its range. Also reclaiming, right? Reclaiming the range over there, which is not bad. You've had a strong downtrend. You've oscillated around here. If the stock market breaks to new all-time highs, this could easily squeeze back to about 108K. XRP also only just reclaiming. So all these Monday range trades are still valid and available, right? They're available to take. 5-minute time frame, I like to use that to see relative to the 50 EMA, what's happening over there. And you can see it's getting back above the 50. You want that to curl and roll up, and that provides an opportunity. So I do want to remind you, when we spoke about the Monday range trades, it's late in the week now. I prefer when they play out on like a Wednesday or Thursday. We're now on Friday. But we said that those trades weren't valid unless we started to get a proper breakdown on USDT dominance. So USDT dominance needed to break and hold under the Monday high, which is still the same thing. It didn't do that anyway here. It didn't meaningfully hold below. So although something like ETH is getting back into its Monday range, back above the Monday low, we still need to see USDT dominance gain acceptance under the Monday high. Otherwise, it's going to cause problems for ETH at a later stage. Okay, what is this one over here? SUI. Okay, let's just let that load up. Why does the chart look so illiquid over there? They're very weird. Very far. This one got hit hard. Very far. So probably no trade over there. You want to look for things that are more closely representing USDT dominance. So USDT dominance is close to the Monday high, and something else is close to reclaiming the Monday low. That's a better trade opportunity. This is very far away, so I'd probably just skip that. Sonic, also quite far away, but there's your Monday low. You need to break and reclaim that. Let's see. Okay, Toncoin actually reclaiming the Monday low over there. Casper on the low time frames, approaching the Monday low, but a bit far out. This one probably lost it. This is Hype. There's a chance that Hype has put in quite a major top. We can have a look at that quickly. Let's see on this time frame over here. Hype. Okay, it's very touch and go. I mean, I view this as this was your previous trend. You can see there's your highs. There's your highs. That candle over there was troublesome. 16th of June on Monday. Swing failure. It should have closed above there. And then also, if you just want to add in another level over here. Wait, what is this? Let's quickly try that again. There we go. If you want to try that again over there, that was a major level to defend. Started to break below those high lows on a closing basis, threatening the trend line. If it breaks below this first bounce area, 29, and then it might lead into a lower high. So it's still trying to hold that there, because of course, self-fulfilling prophecy, a lot of traders will just look at a simple trend line like this and start to buy, but they're going to be building up mass liquidity underneath this. All right. What else? Okay, let's quickly check ETH maybe on the daily time frame. So a big level for ETH, right? Very, very big level for ETH. If USDT dominance can break down now, today, over the course of the weekend, the hope does remain alive that this becomes a high-low. Your third high-low, looking for a move towards the 2,800 region. And if this can break towards 3.3, that's going to bode really well for the rest of the market. Okay. But very choppy market. Hard to trade because low volume is relative. Low volume at the end of a bear market and the start of a bull market is a much easier read. But low volume, when you're this late into the cycle, makes the odds like 50-50. It becomes, touch and go. Like it could break up, it could break down. So we like to play where the odds are very, very high in our favor. All right. Cool. Let's see what else you guys got in the comments. Let's quickly review the results over here. Okay, so it hasn't changed much. About 1,000 of you have voted, and a lot of you are holding altcoins. So you're obviously praying for that Bitcoin dominance breakdown. Where's our Bitcoin dominance chart? Here it is. So Bitcoin dominance, remember this was very close to crossing down, and we had the histogram turning red, but this is based on the weekly close, so it hasn't actually fulfilled yet. If you just get a little bit of a drawdown over here, that could provide some much needed relief. But major resistance level that's coming up soon, the next big level is 66% for me personally on Bitcoin dominance. If that spikes over here, you got the top of the parallel channel. You also have the top of the range, which is the pink box over here. That's going to be a big resistance area. All right. So if you want to learn more, guys, everything is in here, right? Remember, if you look, I update all these things in Whale Room Discord. And all of our other traders are in there as well. And we have a little exclusive competitions and things where you can win Rolexes and all sorts of stuff in there. Exchange partners help us with some great opportunities for you guys. All right. Other than that, guys, I'll probably see you all tomorrow. So I hope you have a great day. That's it from me. Stay safe out there, and I'll see you guys soon. Cheers for now.